Unlock the secret to wealth preservation without taxes. Discover the ultimate investment strategy that withstands inflation and builds prosperity seamlessly. Hello and welcome back to No Money. In today's video, we're diving into the world of investments, and we've got an extraordinary topic for you. If you've ever wondered about the best investment that's not taxed at all, you're in for a treat. Today, we'll be exploring the insightful wisdom of none other than the legendary Warren Buffett, the 8th richest person in the world. Stick around as we unravel the secrets behind the investment strategy that could safeguard your wealth in times of inflation without costing you a dime. The Buffett Philosophy. Warren Buffett, the financial maestro with a net worth of $116 billion, offers a philosophy that could be your guiding light in the complex realm of investing. In stark contrast to some of his billionaire counterparts, Buffett's approach is refreshingly straightforward. During the previous year's Berkshire Hathaway annual shareholders meeting, he bestowed a pearl of wisdom that resonates as the cornerstone of our discussion today. Buffett's core belief is elegantly simple. The best investment one can make during challenging times is to excel in something. Why? Because, as he astutely points out, people are willing to exchange a portion of what they produce for what you deliver. In essence, the crux lies in the continuous development and refinement of your skills. This philosophy underscores the timeless principle that mastery of one's craft not only enriches oneself, but also establishes a reciprocal relationship where value begets value. So, as we embark on this exploration of Buffett's insights, keep in mind that the path to financial resilience might just be in becoming exceptionally good at something. Skills are inflation-proof. Now, let's deep dive into Warren Buffett's profound perspective on how skills act as an inflation-proof investment. According to the Oracle of Omaha, mitigating the impacts of inflation begins with continuous self-improvement and staying at the forefront of your chosen field. Buffett firmly believes that whatever abilities you possess cannot be taken away or inflated. The essence of his philosophy lies in the notion that the best investment, by far, is anything that develops yourself, and here's the kicker: it's not taxed at all. This could encompass a spectrum of endeavors, from pursuing a higher education degree to engaging in specialized training courses, seeking mentorship from seasoned professionals, or simply expanding your knowledge through voracious reading. The sage advice extends beyond the conventional realm of academic or technical skills. Buffett encourages individuals to excel in everyday activities by doing them exceptionally well. In his perspective, strong communication is paramount, stating that honing your communication skills can potentially increase your value by at least 50%. This emphasis on effective communication highlights the importance of not only possessing skills, but also being able to convey and apply them in a way that adds value to others. In these tricky times of inflation, Buffett urges against pursuing skills that won't serve you well. Instead, he advocates focusing on the fundamentals, doing ordinary things extraordinarily well, and consistently improving your capabilities. This approach not only acts as a safeguard against inflation, but positions you as a valuable contributor in your professional and personal spheres. Beyond skills. Hedges against inflation. Surviving inflation requires more than just sharpening your communication skills. Once you've invested in yourself, it's time to consider other avenues. Warren Buffett highlights a few popular hedges against inflation that you might want to explore. Let's take a look at them. Number 1. Real estate. Buffett emphasizes that real estate is generally a sound investment during inflationary periods. The key advantage lies in its unique characteristics. It's a one-time outlay, and you can experience an inflationary expansion in replacement capital without having to replace yourself. Whether it's your own home or a residential real estate investment trust, REIT, real estate provides stability in an investment portfolio. Let's dig deeper into the world of real estate investments. If you've already secured your primary residence, you might consider diversifying through a REIT. These publicly traded entities collect rent from tenants and distribute it to shareholders in the form of dividends. The beauty of REITs is their accessibility. You can invest in them without the hassle of managing individual properties. To take it a step further, online crowdfunding platforms offer an innovative way to pool resources with other investors, allowing you to collectively own a share of a property. For those who prefer a hands-off approach, investing apps and online platforms can assist in constructing diversified real estate portfolios. These tools leverage technology to help you make informed investment decisions, seeking to maximize returns while keeping fees low. The real estate market can be a robust hedge against inflation, offering tangible assets that tend to appreciate over time. Number 2. Stocks pricing power. Moving beyond real estate, Warren Buffett's investment wisdom extends to the stock market. In a letter to Berkshire Hathaway shareholders in 1981, he highlighted 2 crucial characteristics that make a business well adapted to an inflationary environment: the ability to increase prices easily and the ability to take on more business without significant additional spending. Let's explore this concept with a real-world example. Buffett has a penchant for high-quality businesses with low capital needs, and Apple is a prime illustration. The tech giant boasts impressive financial metrics, a testament to its efficiency, strength, and negotiating power. As of June 30, 2023, Apple ranks as Berkshire Hathaway's largest stock holding, comprising over 45% of the conglomerate's entire portfolio. Buffett's criteria for investing in Apple were different from other businesses he owns. He recognized Apple as a superior business, highlighting its capacity to weather inflationary periods. This insight prompts us to consider businesses that exhibit similar characteristics, ones that can maintain or increase their pricing power and handle growth without substantial additional investments. Number 3. Gold. While Warren Buffett may not be a proponent of gold, many investors see it as a solid hedge against inflation due to its historically stable purchasing power. Gold is often regarded as a store of value that can withstand the erosive effects of inflation on currency. Investing in gold can take various forms. You can directly acquire physical gold in the form of bars, coins, or jewelry. For those who prefer the convenience of the stock market, investing apps facilitate investing in gold mining companies. These companies extract and process gold, potentially benefiting from its value in times of inflation. Additionally, gold exchange-traded funds, ETFs, provide an avenue for investors to gain exposure to gold without directly owning physical gold. ETFs track the performance of gold prices, allowing investors to participate in potential gains. Another intriguing option is a gold individual retirement account, IRA, which permits you to invest in precious metals like gold in physical forms, such as coins, as part of your retirement savings strategy. And there you have it, Warren Buffett's recipe for the ultimate tax-free investment. By focusing on continuous self-improvement, excelling in your chosen field, and exploring strategic investments, you can navigate the challenges of inflation and potentially grow your wealth. If you enjoyed today's deep dive into the world of finance, don't forget to hit the like button, subscribe for more valuable content, and share your thoughts in the comments below. Thanks for watching, and until next time, happy investing.